of the webinar series on the home buying process. I'd like to introduce my partners. The first one that you'll see under the other label of Philly's Key Teams, they are a husband and wife couple, Jackie and Ernest Key.
Hey.
Hello.
So we also have a couple of amazing presenters today. Michaela Gouget is presenting on credit repair, and she'll be talking to us in a little bit. And we also have Diane Clerkin from Housemasters presenting to us today on the home inspection process. We also have two of our other partners that we work very closely with. Marissa Carey from Pinnacle Team Mortgage, who presented to us last week about the mortgage process. And very exciting, next week, our presenter is going to be Diana Watcher. Let's hope I got it right this time.
Close. Wachter.
Wachter. Oh, gosh, I really need to figure this out. And I even practiced. Who is from Access Abstract and presenting to us on the title process next week. So I'd like to kick it off and get started with Jackie's going to be talking to us a little bit about Ernest is going to be talking to us first, and then we'll go from there. Just a couple of notes. Everybody is going to be on mute if you, and we ask you to please hold your questions to the end, and we'll get to them. Otherwise, you can pop them in the chat box, and I'm going to be moderating that. All right, so let's get started.
Hey everyone, it's Ernest here. So basically the format is going to be, Michaela's going to present first about credit repair. And she's going to set the bar high for me to proceed with the agreement of sale. I'm not going to bore everyone too much with the contract. I'm just going to cover some highlights and some things that I think are important to note when you're making an offer. And then we're going to follow that up with Diane from Housemaster to discuss the home inspection process. So that's pretty much the format. And then we're going to open it up to Q&A, which is probably the more exciting part. So Michaela, if you want to begin, that will be dynamite. And I don't know who's controlling this.
Ernest, you have control of the screen. So you'll be able to go through.
Why would you put me on a spot like this? I have it. Yes, I'm not the most tech. I'm getting old.
Okay, you got it now.
No, I think that's Raquel doing it.
Okay.
All right, Raquel, yeah, you got it. Good job. Thank you.
You're welcome. So let me.
I got fired.
All right, Michaela. So you have control now.
Perfect. Awesome. All right. Perfect. All right. So I want to start just with some current market trends and statistics that we're seeing right now. And then I'm going to touch on how our program works and how we can help increase your clients' credit scores. So right now, in the last 3 weeks, 17 million people have applied for unemployment, which has really, really drastically changed, the real estate market, as we all know, with the COVID-19 pandemic. The unemployment rate has been at 13%, which is actually the highest it's ever been since the Great Depression. And then there was a 2,000% increase in mortgage delay requests to actually delay or, put those mortgage payments into forbearance. And then 62% of all the mortgage loans actually are government-backed loans. So that's obviously going to change a lot of the market, the buyer's market, and affect it. But the biggest thing that we're seeing is that about 25% of buyers are getting denied or unable to buy a home due to credit score limitations increasing and the changes in the mortgage industry that have happened due to the COVID-19 pandemic. So right now, some pretty interesting statistics and things that I'm seeing personally. The first one actually has to do with the minimum credit scores like I touched on. So previously, before the pandemic, the minimum credit score could typically be anywhere from about a 580 to a 620 to qualify for a home loan. And over the last few months, it really has changed day to day as far as the standards and the minimum requirements to get qualified. So we've seen those credit score minimums jump up to, you know, a 640, 660, even 700. So it's really, really affected and eliminated a large portion of the market. The good news is that as things slowly start to open back up, they are forecasting and projecting that these credit score requirements will resume back to kind of those 580, 620 margins. But again, it's very day to day right now. So just staying up to date and knowing what's changing for your buyers and how to overcome and explain these things to them is going to be really helpful. And then the second thing I want to touch on is forbearance and the word forgiveness. So I'm sure a lot of people are hearing these terms right now. And in the statistics, it explained that there's a 2,000% increase in forbearance requests. So people are opting to place their mortgage payments into forbearance, meaning that they're not going to have to pay those payments right now. And depending on the terms that they set up and negotiate with the lender, they can either pay that forbearance term at the end of the forbearance term, meaning that if you put, you know, your mortgage into forbearance for 3 months, let's say, because you're unemployed or furloughed, then potentially on that 4th month, all 4 mortgage payments could be due as a balloon payment. So it's really important that everyone understands the terms and what their lender is locking them into, because they are projecting that there is going to be a large wave of foreclosures, because those people that weren't aware or weren't able to save for 4 full months of mortgage payments, now all of those 3 and now this 4th payment will be late, and that actually will begin foreclosure proceedings. So just making sure that you know when the forbearance term is up, when that payment's going to be due. It can either be due at the end of the forbearance term, it can be due at the end of the loan term, which could be 10, 15, 30 years, depending on the loan. Or they could just simply increase your monthly payment. People are opting to choose to maybe refinance. And then also there have been some changes as far as if you placed your mortgage into forbearance, can you refinance your home? So that all has been changing day to day. And then as far as forgiveness goes, that's not really a term that we see in the mortgage industry or real estate industry, but we have seen it with some landlords and also with some personal loans. They've rolled out some programs where you actually can get, you know, a month or 2 of payments forgiven, where you actually don't have to make those payments. But again, with all of this, just make sure you're reading the terms in writing. I see so many people that, you know, talk to a rep over the phone or think they understood something from their perspective, but then when they get, you know, the contract or the terms in writing, it's actually not exactly how they understood it. So just make sure you're double checking things with your realtor and with your loan officer, and that you're fully aware of everything that what your options are and what you could be doing. And then also a big thing that's coming up right now is what to pay versus what not to pay. Some people are in a position where they're going to have to pick and choose which bills they can actually pay right now. So I honestly will not ever tell someone not to pay a bill, but if you were going to push a bill off, we would suggest pushing off utilities. Those are actually not reported onto the credit report. You can go up to about 90 days before they will turn off electricity. And at that point, in month 4, they can start going after that amount for collections. But if you were to push something off, the order it would be utilities, then credit cards, then auto, and mortgage last. And then just to dive into our programs, so we specialize in removing the negative information that gets put onto the credit report. So whether it's a late payment, paid collection, outstanding balance collection, all the way through tax liens, judgments, divorce issues, bankruptcies, repossessions, we really do it all. And whether our clients have 5 or 500 negative items on their credit report, we start investigating everything right away. Our process, it's very different than what the vast majority of other credit repair companies do. So other big companies, Lexington Law, Continental Credit, Home Loans Assist, FES, these processes are just generic disputing processes, which can remove, you know, incorrect or erroneous information on the credit report. But the big thing that happens with disputes is that as soon as a negative account is disputed, it actually will trip up the underwriting system for a mortgage. It's an immediate red flag and denial, because no accounts can be in dispute. They all must be resolved. And the bigger thing is that with a generic disputing process, the results often take long periods of time. And like I said, it really only occurs if something is truly an error or erroneous. But the biggest thing is that if they do accomplish a deletion in that process, it's almost guaranteed to get re-reported back onto the credit report within a month or two, because there's no proof or investigation involved in a disputing process. All they're saying is, I'm disputing this item, it is not mine, please remove it, over and over and over again to the bureaus. So our process is completely different. We're using a 4-step, highly complex investigation process that's upholding the Fair Credit Reporting Act to the highest degree possible. And in a nutshell, that law says that anything that's on your credit report, it must be 100% complete and accurate. So with our 4 steps, our first step, we're going to remove blatant errors. So these are things like duplicate accounts, thefts, frauds. Maybe a junior has senior's medical bills on his credit report. They're not his. That's the easy stuff that we remove right away. The second step is where we demand very, very specific documentation from each of the credit bureaus. There's thousands of things that we can demand from them, like proof of original signatures, 7 years of payment history, transaction history dates and times with account balances. Just very, very detailed items that legally must be on file at the bureau level. And if they cannot provide us with all of the documentation that we demand for each negative item within the federal timeframe under law, which is step 3, 30 days, then they're in direct violation of the FCRA, and that negative item has to immediately be deleted and removed, no matter what it is. So we have our clients mark their calendars about 30 to 35 days after they enroll in our program. The results of our investigations do get mailed directly to them at their home address. We are working on their behalf. So as soon as we can see those results letters, we can let our realtors and our clients know what was deleted and if they're ready to close on their home loan, or if anything did come back verified from the bureaus, meaning they had that documentation on file, then we'll immediately relaunch another investigation, digging deeper and asking for more specific items, which is step 4. But we conservatively see a 15 to 25 point increase per month per credit report. And on average, clients are enrolled with us between 2 and 4 months. It can be less, it can be more. It does depend where the starting scores are now and where exactly we need to get them in order to qualify the client for the home loan. But that really is our niche, is the mortgage and real estate industry. So we don't do any marketing or advertising. All of our business is built on referrals from our realtors and our loan officers. And then the other thing we're going to do with our clients is educate them on credit so that they can maintain good credit well beyond our program. So this is actually a calculation of a FICO score. You guys can see here the largest section, 35%, that's payment history. So the entire history of all payments on all accounts. This is also where all of the negative account information is factored. Late payments, bankruptcies, etc. That's all factored here. And the biggest thing that we show our clients, realtor loan officers, is that 65% of the credit score has nothing to do with negative account information. This is what we call positive credit. And these are the variables within the client's control that we can help coach and maximize and make sure that their scores increase as quickly as possible. So just to give you guys a quick example here, the next section, 30%, which is debts owed, this is actually where all open and active revolving credit card trade lines are factored, and also how they're utilized. So if a client doesn't have an open and active credit card, let's say, they're missing out on 30% of their FICO score, which is huge. We see people all the time that, you know, cash is king and they think they have a good credit score. They probably actually don't even have one. And so we will go over, you know, how we can help manipulate and maximize this chart, but also help our clients maintain their good credit well beyond their closing. And then our portal, this is great. It is over bank level security and it's also bilingual. So our Spanish speaking clients can use our portal, and we do have Spanish speaking staff available as well. And then what's great is on our client side of the portal, you're gonna see your realtor. To the left, you'll see your dedicated credit advisor team. At the top, you see the updated credit scores. And beneath that, you see your progress to completion chart. And then our mobile app is great. We have our portal, our send documents feature. We also have our e-signature tool, so it makes it really easy. Clients don't need, you know, a fax machine or a scanner or anything like that. They just need their mobile phone. And then how our pricing works is that normally our enrollment fee is $129. If you are referred by the Key team, you actually are qualified for a $100 discount. So then it's only $29 to enroll. That launches all the investigations, sets up the online portal, and also assigns the dedicated credit advisor team. From there, it's $99 per month billed in arrears, meaning we do the month of work first, then we bill the client. So for example, let's say if someone enrolled today, it would be $29 today, and then next month on June 21st, that would be the first bill of the $99. There are no contracts. It's a month-to-month service that can be canceled at any time. Whatever day the client calls to cancel on, it's just a prorated final bill, just like a utility company. And then other than that, our enrollment is really easy. I'll have all my information and the Key team's information for referrals. But I do just want to touch on some commonly asked questions that my realtors and clients and loan officers are really, we're getting a lot of feedback on this stuff. So the first question a lot of people ask is, should I pay off an outstanding past collection? Let's say you have an old medical bill from a year ago or 5 years ago. So the big thing, we will actually advise our clients not to pay any collections that are past negative items, because anytime they set up a payment or make a payment plan, it actually updates something called the DLA, the date of last activity. And it makes that past negative item now present to the current month and year that you make the payment in, which actually will hurt your credit scores, dropping them anywhere from about 40 to 60 points, which is very substantial. So we will actually advise our clients not to touch those items. We want to work to try and get as much of the negative information as we can deleted and removed. That way, we're not having them spend the money to update that DLA and then hurt their credit scores. The second thing people ask is, why is my Credit Karma score so different than my mortgage score? Or why does my Credit Karma report not show this collection on my credit report? So the big thing with these free online websites like Credit Karma, freecreditreport.com, Credit Sesame, they are not regulated. They are not in a specific lending industry. And so FICO, the Fair Isaac Corporation, has all these different algorithms to calculate a credit score. There's 54 algorithms in the lending industries. So Credit Karma and these online websites can use any of those 54 algorithms that they want. Whereas a mortgage company, Fannie Mae and Freddie Mac, have only approved 8 algorithms for the mortgage industry. It's the most strict and specific. And also these free online websites like Credit Karma, for example, they're only pulling data from 2 out of the 3 credit bureaus. So it's not a complete and accurate profile of information. And we work off of mortgage algorithms and mortgage credit scores. So that's what we're going to be working with our clients. And then the last thing, a lot of people are hearing about Experian Boost or boosting your credit scores on your own, maybe self-reporting utilities or rent. And the big thing that I like to explain to people is that, again, in these mortgage algorithms, even if you're self-reporting that information and Experian can verify it in your bank account, it actually is not information that's calculated into the credit score for a mortgage, and it's not factored into that algorithm. So by giving up all of your personal bank information to the credit bureaus, to Experian, I just think that it's safer to not give that information out to private companies. But again, that's just what we advise our clients and let them know that it can help with maybe an auto score or a credit card score, but it is not going to affect or be relevant to the mortgage score. Other than that, that is it. And I'm going to pass it off to, I believe, is it?
It's me.
Me. Yeah, actually you have to give controls back to me, and then I have to give controls to Ernest.
Perfect.
Hot potato.
I know, right? Oops.
Oh, that's perfect.
Great job, Michaela.
Thank you.
Thank you,
That
Michaela.
was awesome.
What's up, home? That's a nice haircut you got.
You like that? I just
Yeah, I
got
like
it trimmed on the sides a little bit last night. So, for my birthday cut.
Very nice.
Happy belated birthday.
Thanks,
Happy
man.
belated.
Yeah. I don't know a better place to spend my birthday than here,
Oh, I feel so special now.
Yes.
Yeah.
So, Ernest, you do have control over the screen. You'll have a couple more minutes to access those controls.
Oh, excuse me. All right.
Quickly.
I'll talk to you later, home. Gotta
All
go. All right.
Go back.
go back. I don't even know why I'm not
Okay,
controlling.
there you are.
So like I mentioned earlier, I'm going to briefly discuss the agreement to sell. All of the items below the agreement to sell were touched upon last webinar. So I'm not going to go into those. I'm just going to talk about the first few pages of the agreement of sale. So moving right along. Okay, this is page 1 of our agreement. And it's really not that exciting, but it is important, especially when you're submitting an offer, because if you submit this first page and it's very incomplete, the listing agent can get kind of turned off, and it can show a lack of professionalism and enthusiasm. So we on the Key team, we make sure we pay very close attention to even this first page. We fill out everything we can fill out, and that's pretty much it when it comes to the first page of the agreement. So now moving on to something a little more exciting. This is where we make our offer. And if you can see on paragraph 2, that's where we put in our purchase price. And that's self-explanatory. That's basically what we want to pay for the property. Beneath the purchase price, you have what we call our earnest money deposit section. And the strategy behind this is we want to give the listing agent, well, really the seller, a strong enough earnest money deposit to show that we are serious, but we don't want to give them too much where we have a lot of money out in the world being unprotected or being exposed. So there's a lot of strategy with this section, even though it's only 3 lines. And then moving on to paragraph number 3. This is our seller's assist. Seller's assist basically is assistance from the seller to help the buyer with closing costs, and is negotiable, obviously. And depending on what type of financing you're getting will dictate how much seller's assist you can ask for. So for example, if you're getting a FHA loan, the maximum is 6%. Marissa can correct me if I'm wrong, but I'm almost positive that 6% is the maximum amount of seller's assist you can ask for with a FHA loan. With the VA loan, it's different. I believe it's in a 4% range and so forth. So please be sure to ask your lender what the maximum amount is that you can ask for, and then it'll be my job to negotiate with the listing agent to get as much seller's assist as possible, which once again helps you with closing costs. And there's other nuances with the seller assist as well. So for example, say the seller gives you the maximum amount of seller's assist on an FHA loan, which is 6%, but during the inspection process, you see that you have some repairs that need to be made and you want credits. If you got 6% seller's assist, then now you don't have the ability to receive any credits because you already got the maximum amount of help from the seller that you can get allowable by the bank, if that makes sense. Hold on, let's go back to that page. I just want to make sure I didn't miss anything. I don't know how to jump. I didn't even turn this page.
Just that.
Yeah, I think somebody's
Okay, there you go.
somebody's pranking. So next is paragraph 4, which talks about settlement and possession. That's basically when you want to close the deal. The importance in this paragraph is we want to close the gap between the seller getting their money and not waiting a lot of time for that money. So the faster we can close, the more attractive our offer becomes. And that'll be up to the buyer and the lender to see when is the earliest time that this deal can close. Now, a lot of times that's predicated upon not only the lender, but sometimes the buyer, because the buyer may need some time to get documents together. You have the appraisals within that time, et cetera. But basically, the faster we can close this deal, the better the offer looks to the seller. And then moving down to paragraph 5, where it says dates, time is of the essence. This is basically indicating how much time the seller has to accept your offer. The strategy behind this is you don't want to give the seller a lot of time to think about your offer. because during that time they're thinking about your offer, other offers can come in and kind of knock yours out of the box. So we give the seller enough time to review the offer, but not too much time that they can shop your offer around or have too much time to think and not consider your offer. Okay, next. So there are two boxes here. Generally speaking, we're only going to touch on the first mortgage on the property, that box. And this is where you put your loan amount, your term, which traditionally is 30 years, what kind of financing you're receiving, if it's FHA, if it's VA, if it's conventional, and the percentage that you're borrowing from the bank, etc. All of this information I'll receive from your lender on a document called the loan estimate sheet. And basically I take that information and I just transpose it into this box. And of course, we're going to elect where it says mortgage contingency, we're going to elect that. So therefore, no, up here. Therefore, if for whatever reason you don't get approved for your mortgage, you can get out of the deal and you won't be penalized, which is very important. And if we were doing a cash offer, we will waive that contingency because we're not getting mortgage financing, and this box would not be filled out. But that normally happens only with investors, where it's a strictly cash deal. And if you look at section B here, this is where you put when you're going to get your mortgage commitment. And that's important because it gives the seller more confidence that you're going to be able to close the deal and get your financing. And normally we set that date 2 weeks before settlement. We like to get the seller that mortgage commitment. So I think, yeah, that's all covered. So now on to this section here. So if you're getting FHA or VA financing, this section here kind of protects you if the property does not appraise for your offer price. So if we were doing conventional, I would have to use another document, which is called an appraisal contingency. But if you're using FHA or VA, we don't have to bring that document, and we can just simply put in your the value of the property here, which, like I said, protects you if the property does not appraise. Moving on to the next page. Okay, this section here talks about due diligence. And basically, within your due diligence period, you're going to be getting your home inspections. You're going to be looking for things like radon. I'm not going to go too much into it because we have Diane here. I don't want to take her job. But you're going to look for radon, any defects with the property, like the windows don't work, the doors are slanted, things of that nature. You're going to look for your wood destroying insects. And there's some other things here that you can check for, your water service line. You can get a sewer scope, which is not built into this agreement. The sewer scope will be something I would have to add into the other section. But this is basically where you would discuss, this is your opportunity. Basically, this is your opportunity to back out of the deal if there's a defect with the property. So, like I said, the water sewers line, the radon, the online sewage, which we really don't have to deal with because in the city of Philadelphia, like 99% of our sewer lines are is public. So, and you can back out if you can't get the property insured. So some of our properties in Philadelphia are in the flood zone, and if the insurance is too high, or you can't find a company that's going to insure the property, then that's another way you can back out, which rarely happens in my experience. So we'll go on to the next page. And I'm moving a little fast because I'm on a time constraint, but we're going to have Q&A so we can always go back. And this section right here is very important, paragraph 13, because this sets your contingency period and how long you have to get your inspections completed. Traditionally, our default is 10 days. If you're trying to negotiate a hot property, you can reduce that. Reduce it to 5, you can reduce it to 3. You know, I have a good relationship with house masters, so sometimes I can get them to do the inspection the same day or the next day, which which I do often. Sorry, Diane, but the quicker we can get the inspections done, the quicker we can close the deal, which is more attractive to the seller. So, you know, this document, we got to find our leverage points. And this is one of those leverage points we can have by reducing the contingency period. Because some sellers, like for instance, you can also put 15 days to do your inspection, but then the seller may feel that you're trying to weasel your way out of the deal, or you're looking for an easy way out, and you don't look as strong as if you had 10 days or less. Yeah, everything else is just boilerplate stuff. Okay, here. Okay, this, if you look at B here at the top of the page, this talks about how much time you have to negotiate after the inspection that happens. So you have your inspection, you know, your buyer agent, which would be myself or Jackie or Raquel, hopefully, we'll review that documentation that we get from Housemaster, which is going to go over all of the defects. And then you, the buyer, will say, okay, I want this fixed. I don't want that fixed. I want credit for that, so forth and so on. Then I write up something called a buyer's reply to the inspection. I send that off to the listing agent, and then the seller gets to look at some of your demands, so to speak, and he or she will decide if they want to fix it or not, or credit you or not. And so that section just explains the time period which all of that happens. And these deadlines are very important. So if we get that home inspection and I don't send that buyer's reply out fast enough, then you could be locked into buying a property as is, which obviously we don't want to do. And then the seller also has a time to send us their reply back, or basically they agree to fix everything. So this is very delicate stuff here as far as our timeline. And I believe that is it. Yeah, that's it.
It is. Yeah, so just give me back control of my screen. And
Did I stay within the time limit?
pretty much, yeah, definitely.
Give up control.
Okay. So we're basically going to segue to Housemaster now, because like I said, that part I just ended on covered our contingencies. We were talking about inspections, and that's where Diane comes into play. All right, thank you.
Thank
You're
you.
welcome. So just give me a second, guys, and I am passing control over to Diane Clarkin with Housemasters, and she's going to be talking to us today about the inspection process. So Diane, I believe that if you go ahead and accept controls, you will be able to pick it up from here. Diane, can you hear me?
Okay, now I'm unmuted now. Sorry, just help me take over here. Can control. I don't think I'm controlling yet, am I? Karen?
No, you're not. We're still waiting. So you have to go into, are you?
View options. Saying give up remote control.
Not give up, you need to accept it.
Yeah, I don't see that. Hold on.
Just like this morning.
I know. I'm trying to find it though. It's not there.
So
Zoom doesn't make our lives easier.
No, it doesn't. I'll get good at this. Sorry, at the top it says you can control, and then my options. Is just saying give up remote control. I don't know where to accept it.
Above that, it should say accept or take.
not. I don't know what I'm doing wrong. Not showing up.
Okay, why don't we do this then? So,
Yeah, Kel, can you just keep
why don't
control?
yeah, exactly.
Yeah.
Why don't I just click through for you?
Okay, perfect.
Okay,
That'll
so
work.
do it that way.
See, Diane, I got you an assistant too, so you owe me lunch.
I know. But I don't, the option that was there this morning doesn't seem to be there, so we'll do it your way. Okay. Hi, everybody. Thank you for being with us today. My name is Diane Clerkin. I'm one of the owners of Housemaster Home Inspections, and we're just going to, in a short time period, cover a lot of information about the inspection process. And Ernest, remind me to talk about the reply to inspection. Okay.
Okay.
Okay. So just real briefly, definition of a home inspection: non-invasive, non-destructive, and objective. And what that means is we're not opening up walls. We can't knock down drywall, etc. We can't do anything that would be destructive to a property, but we're looking for any evidence if there's a problem going on behind the walls. Our inspectors are really well trained to kind of diagnose and a little bit of detective work. Objective just means we can't have any kind of financial interest in the property. So the things that are covered in a standard home inspection are all the things that are listed here. A couple of important things to note: cooling system can only be inspected in the warmer months. We're just now getting into the season where we can run air conditioning systems. The reason for that is when the temperature outside is below, I believe, 60 degrees, the coolant that's in the system gets like a sludge. And if you turn your air conditioner on, you can actually crack your compressor. So I know when we start getting the first hot days of the year, everybody cranks up their central air, but that's really not a safe thing to do. Built-in appliances, that does not include refrigerators. It doesn't include televisions, stereo systems, although I always date myself when I say stereo systems. Built-in appliances are literally fixtures. So your water heater, your stove, oven, built-in dishwashers. Go ahead, next slide. What we do, we break down the house by element. You've got a roof page, exterior, foundation substructure, which would be basements, typically basements. Kitchens would have their own page, and within every one of those sections, we rate the elements. So we think of a roof as, just the roof over a house, but there are multiple elements in a roofing system. And so each one of those is going to be described. We give you estimated ages. So a kitchen is a really good example. Every part of the kitchen, the oven, the plumbing, the sinks, the dishwasher, the floor, the windows, the ceilings, each of those separate items is going to be described if there's any concerns, and also maintenance suggestions. That's a really, really important part of the home inspection process. It's not just about getting a buyer information about the home today, it's preparing them for home ownership. So these are the things that you should do, for instance, in the fall, to get your heating system ready for the change of seasons. And important, we do a same day report. So go ahead. Okay, this is just a quick graphic. We love it. We're 40 years in business and across North America. And over all that history and experience, these are the statistics of, based on the age of a home, the type of deficiencies and the frequency of deficiencies that we find. The thing I really love about this graphic is people think, for instance, if they're buying a brand new home, the green column would be new construction or relatively new construction, less than 20 years old. They think it's perfect. They think it's a brand new house, everything's great. You can see from those statistics that even in brand new homes, there are defects. And the important message of this graphic is there is no such thing as a perfect home. Every home is going to have defects, whether it's 100 years old or 2 months old. And so maintenance repairs are a normal, natural part of home ownership. And this is kind of our perspective. Welcome to home ownership graph. So go ahead, next. Okay, and Ernest had talked about it in the previous section. When do you need a home inspection? You've already gone through the negotiations, you've had your offer accepted, and you have a limited contingency period. We are extremely mindful. It's one of the first questions that we ask a buyer: when did the seller accept your offer? And how many days do you have for the inspection contingency? We will still have people that call and tomorrow is their deadline. And then, we try to guide them, we get them scheduled, but also, in some situations, the realtor will help get them an extension. But we're very, very respectful of those time contingencies. Okay, home sellers elect to have pre-listing inspections done before they put it on the market. It's a really effective strategy. It's not for every seller, but essentially what it does is allows the seller to get ahead of the buyer's inspector, if you will. So identify the issues, make the repairs or disclose them so that they're essentially, if it's an issue, it's taken out of the negotiation because you've already said, look, we're aware of this and we've priced the house accordingly. What we've also found over 40 years in business is that for every dollar of repair that is needed, a buyer is going to negotiate $2. So a $500 repair to the roof, if the seller takes care of it before they put the house on the market, that would on average be negotiated for a $1,000 credit on the back end from a buyer's inspector. So it definitely makes sense financially for sellers to do this. And also, again, just to give them a little bit more control of the transaction. Okay. This is what we are not. We get a lot of questions about code. We are not doing code inspections. One important, I guess, to put a fine point on that is we are required to call out safety issues. So for instance, if there's steps down to the basement and there's no railing on the steps, or there's gaps in the spindles of a railing that are wide enough, for instance, for a child to fall through, that's a safety issue. In most places, that is also code. So we're not calling it out because it's code, because every city or town has different codes, and it would really be impossible for a home inspector to know, every single code in every single city or town. But if it's a safety issue, we're going to call it out. And the railings are a really good example. So next one. Okay, just hop back one for me, Karen. Very important. Most people, even real estate agents, are not aware. Pennsylvania does not have a home inspector license. They have a home inspector compliance law, and it is essentially an honor code. So your home inspector says, yes, 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 I met all those requirements. And next slide, this is the piece of paper that your home inspector will produce to say, I am compliant with the state of Pennsylvania's regulation. This is essentially the same as the driver that pays 1 month of car insurance and then stops paying the premium, but still has the insurance card. So there's really no teeth to this. It's an honor system. It has been dramatically, terribly abused. So we always say buyer beware, because you want to know that you're working with someone that actually has the insurance and the expertise and the training and the continuing education. Now the next slide, the city of Philadelphia does have a home inspector license. And that is a physical piece of paper that you as a realtor or a consumer can ask a copy. I want a copy. So then if you go to the next slide, that's what that looks like. So just really important, again, buyer beware. You want to make sure that you're working with a reputable company that is properly credentialed, insured, and trained. So next slide. Again, this all goes back to inspect the inspector. If you as an agent or a buyer are working with a company and you're not familiar with them by reputation, there are many questions that you can ask to make sure you're working with a professional. We want you to attend the inspection. That's a really great learning process for both realtors and buyers. And often there are ancillary services needed. Ernest had touched on it. If you go to the next slide. Radon is a very real radioactive environmental hazard in all across the country, but certainly Pennsylvania has some of the highest radon levels in the country. The little box that you see, sorry, go back. All right, there you go. The little box is a continuous electronic radon monitor. That's the test that we use. It's the most accurate. It gives us on-site results at the end of the 2-day test. You're not losing time sending it out to a lab. We download and analyze it in real time. It is the second leading cause of lung cancer in the United States, radon gas, EPA estimates. And if you smoke on top of being exposed to radon gas, that is an exponential health threat. The graphic here is very misleading because it looks like Philadelphia is magically an island of good health in the middle of an unhealthy state. The red zone is where you, gosh, this looks an awful lot like the COVID map now, doesn't it? The red zone is where you have the highest levels, the yellow, Philadelphia. The only reason that appears to have such low readings is because far fewer homes on average have tested in Philadelphia. There's a common myth that there is no radon in Philadelphia. In 18 years of doing business, our highest readings, except for one, our highest radon levels have been homes in Philadelphia. So it's a common myth, but it's a myth. So there is radon in Philadelphia. So another really typical ancillary service, wood destroying insects. Everybody abbreviates that to termites. We're guilty of that ourselves. But in Pennsylvania, there are 4 native wood destroying insects. We're all probably familiar with carpenter ants and carpenter bees. The termites are on the right. Less common is the powder post beetle, and that's lower left there. And those little pinpoint holes are where the powder post beetle actually bores into the wood and causes damage. All of them do the same thing. They essentially destroy wood, and that can cause serious structural damage or other damage to a property. Next slide. Okay, so once we get past this COVID thing, I think we're going to be in a hotter market than we've been the last couple of years. But it certainly has been a seller's market. Low inventory, people are very anxious, multiple offers on the same property, over asking. People have waived their home inspection. And we understand, you know, the market is what it is, but it's really important. This is a massive investment and decision. And even if you're able to negotiate just an informational only inspection, meaning you're not going to negotiate, but at least you know what you're getting into. We just always advise caution before you would waive, before you would waive inspections, because it really is the only way for you to know what you're getting into before you get into it. So next slide. Just a little bit about us. Again, we're 40 years in business. Go to the next slide there. And a little bit more about us there. Just to touch on this, Ernest, you had talked about post-inspection, sitting down with your buyer, creating a reply to inspection. Within the Housemaster Cloud, which is where our report delivery lives, you as the agent and or along with your buyer can actually create the reply to inspection directly from the online home inspection report. So you're creating a PDF. Let's just say you have 4 pages of, you know, poor or fair items. 20 items, but you're going to negotiate 5 of them. you can actually choose those 5 items, create a PDF, and shoot it right off to the listing agent. So you don't have to manually create that report. So it's just a nice feature. So go ahead, next slide. Again, we're, same day report uploaded via the House Master Cloud, which gives you lots of options for reply to inspection, delivering the report to whoever needs a copy of it. Next slide. And that's us. Okay, and good timing here. We have the
Hi, everybody.
Hey,
Randy
Patrick.
Holmes right here, so he's here for any questions.
Great. Thank you so much, Diane. That was very informative. And welcome on, Patrick, the famous Patrick Clerkin. How are you?
Good, and yourselves?
Good, thank you. So we do have some questions that are coming in. So we'll start going through those real quick. The first one is Marissa. I know you were answering some questions in the chat. It looks like all of those were answered. So I did have a couple that were coming in privately as well. The first one was in terms of the mortgage rates, what are we looking at right now? What are the lowest rates that you're seeing?
So one of my lenders actually just came out with an amazing program. It does have minimum credit score requirements and things like that. But because of everything that had happened with COVID-19, and people were initially under the impression that rates were at an all-time low because of the Fed cutting rates. However, that wasn't necessarily the case. When COVID-19 first hit, there was an influx of applications at all of our lenders, and essentially that drove them to have to drive up rates themselves. So because of everything that had happened, like I said, this program that my lender just released is actually capped from 2.5 to 3%. It is based off of your specific scenario, so you may have to buy down to that rate. However, just for an example, I had somebody just yesterday who I was pricing out at a 299, and it was only about a $1,500 buy down. So really great rates. Our lenders are definitely trying, the influx has definitely stopped, and rates are definitely starting to normalize, and we are continuing to see them to drop again.
That's great. Thank you.
Of course.
Yeah, absolutely. Thank you. The next question is for Michaela. In terms of credit score, where would someone be able to go to find that score? And then what would be the next question would be, how can someone get started if they have low credit or no credit? what would you suggest them do first?
Yeah, so to check your credit scores, I always recommend, there's 2 sites through Experian. They're really the same, but you can either go to Experian.com or you can go to creditchecktotal.com. And what's great about that site is it can provide all 3 credit bureau reports, and it will show you through Experian your mortgage credit score. So you can actually see something that's relevant to what the loan officer would pull on a credit report. And those sites are really great because you get a $1, I believe it's a $1 10-day trial. And then after that, you can choose to do a monthly subscription with them or not. And I really like that site because they're really good about updates and letting you know things that are changing. And it's accurate. Credit Karma, they make money by getting more foot traffic on their website so that they can charge for consumer marketing and advertising. So I have found that a lot of times they'll send notifications to clients multiple times throughout the month saying your score's gone up, your score's gone down, something was added, when it really wasn't, but they, was maybe past information that they already knew, or maybe it hadn't updated, or they just figured it out. So I always tell people Credit Check Total or Experian.com, great sources. Or there is a site, it's a little more expensive. I believe it's $29, but that's myfico.com. And I know the bureaus were just recently allowing people to get their credit reports, 1 copy of each report for free once a week. So I don't know if they've stopped doing that, but that's a great option too if you haven't done that already, you can do that once a week. I know they were doing that, I believe, till the end of May, but I'll have to double check. So that's where I would recommend checking the scores. And then if you don't have any credit cards, if you don't have any credit scores reporting, maybe you have credit scores that are reporting to one or two of the credit bureaus, but you don't have any scores with the third bureau, or maybe you just don't have any credit scores at all. The fastest and best way to do that would be to open a secured credit card. It's really important, though. People need to understand that when you apply for a credit card, whether you're approved or not, there is going to be a hard inquiry on your credit to determine if you're eligible, and if you are, what the interest rate or percentage is going to be. So even if you're approved or not, you will lose some points with that hard inquiry to determine your eligibility. And then also opening a new line of credit, any line of credit, whether it's a home loan, credit card, whatever the case may be, the first 2 to 3 months that card is opened or account is opened, the credit scores will take an initial about 15 to 25 point hit. Basically, the creditor wants to see if you're going to use that credit line responsibly. So after about 2 to 3 months of on-time payments or not maxing a credit card out over the limit, you actually will gain all those points back. But it's really important because a lot of people, when we say, you need to open a secured credit card, or maybe you need to open 2 credit cards, they go and apply for 2 regular, maybe a United mileage card and a Capital One card, and they get denied. Well, now they just hurt their credit scores even further. They weren't able to open that line of credit. So we always recommend secured credit cards, just because there's a lot of secured credit cards that are guaranteed approval and that don't need to use a hard inquiry on the credit report. So that way we're sparing as many points as possible. And the biggest thing is that make sure the card reports to all 3 credit bureaus. So the reason why someone wouldn't have a credit score would be because there's not enough information reporting to that bureau. So a lot of times we see people make the mistake of opening a credit card and it only reports to 1 or 2 bureaus, which won't help them get all 3 credit scores. But even more importantly, with the mortgage, everything is based off of the middle score of your 3 scores, not the lowest, not the highest. So again, we just want to make sure we're positively impacting all 3 scores to give that mid score the highest chance possible.
Jackie, I also wanted to just add in really quick. At Pinnacle, when you are filling out an application with us, we actually do have the ability to do a soft pull on your credit. And we always start with doing a soft pull. And it actually doesn't cost you anything. If you don't actually proceed with doing a loan, it's not like we're going to charge you for that. I typically always send it to the borrowers, and it essentially looks just as if a hard pull would look. Gives me everything that I need to know on my side in order to calculate your debt to income ratio. And it looks just like a regular report. The only difference is that in the upper hand corner, it's going to say for pre-qualification purposes only. So again, if you do go through and fill out an application with us, we will go ahead and do a soft pull for free for you.
That's great. Thank you, girls. That was really informational. And the next question we had was for the Clerkins. The question is, what are the general inspection fees? And then another question that came through for you is, what common defects do you see when you're doing your inspections?
So we price based on bedrooms, bathrooms, square footage, the style of the property. So a multifamily with multiple units and kitchens and separate utilities would be more expensive than a typical 3-bedroom, 1-bath row house. We pretty much start at about $375 for the 3-bedroom, 1-bath, and that includes a full inspection, roof to foundation, interior, exterior. We do a free carbon monoxide test just for everybody's safety. And of course, every housemaster inspection includes our free housemaster cloud. We have a buyer benefit program that helps them with products and services that they might need, moving vans and things like that, lots of great discounts. And then it also, of course, includes our free utility connection service, and that is where we do all the legwork to help set up gas, water, electric, etc. So we started about $375. Obviously, a little condo would be less expensive, but your average row home is going to fall in around that. And then of course the termite, radon, other services would be additional prices as well. As
Great.
far as common defects,
Common defects, the most common problem we find is probably electric issues, undersized panels, double taps in the panels, outlets not wired properly, not grounded, reverse polarity, heating, especially boilers. We find a lot of times that there's no water pressure in the system, and it's not functioning efficiently at all. We go up on roofs. I mean, roof issues.
a lot of water issues.
A lot of water issues, you know, for the most part. But they're
And
the
that
most
makes
common.
sense because we're in between two rivers,
Right.
so it makes
Yeah.
sense.
Lots of rain.
Yeah.
So another question that just came in for you is, what's the turnaround on a home inspection?
The turnaround time. I believe.
Sorry, yeah, turnaround time.
Turnaround time. So we have 3 full-time inspectors. We do inspections 7 days a week. So we do try to schedule very quickly. Once the inspection is scheduled, our office does all the legwork to set everything up with both, you know, buyer's agent, seller's agent. We keep the communication very free-flowing. If we do a report today, the inspection report is uploaded to buyer and buyer's agent today.
Great.
We're very mindful with radon testing. We try to get the radon monitor in 2 days ahead of time. So the goal is always that the buyer and the buyer's agent have all the information and results that they need the day of inspection. But we do really pride ourselves on being available and accessible. And again, we do Saturdays and Sundays all year long.
All our inspectors are licensed to do termite inspections as well, so the customer knows if he has termites or not the day of the inspection.
Great. And I mentioned you said you go up on the roof. That was a question that had come in. Do you go on the roof? So you mentioned
Yeah,
that.
we carry, all of our inspectors carry 32-foot ladders. And otherwise, I mean, if it's accessible, we'll go up on it. Now, sometimes 3-story rows, you need like a 45-foot. You need roofers equipment. We don't go up on that. Also, a really steep pitched roof, we're not going to go up on that, but we'll go up on the ladder to the edge of the roof and take a close look at it. But for the most part, we go up on most roofs.
We pride ourselves on that roof inspection. So what we always say, as long as it's safe and accessible, and frankly, what Patrick was talking about, the roofer's equipment, you actually would need 2 guys and special equipment. So we did, for a period of time, we had a drone and we were doing the roof drone inspections when we could not physically walk them because they were too high. And then the FAA decided that to fly a drone for any kind of commercial purpose, you require a pilot's license.
Wow.
So it's technically illegal to fly a drone in
Right.
Pennsylvania without that pilot's license. So we're looking into that. So we might have a housemaster pilot. We'll be able to fly you around. So.
That's great. Thank you so much for answering those questions. Diana, you're next up on the hot seat. So questions that were coming in for title is should a buyer get homeowners policy? And the second question
is just owner's policy.
An owner's policy. And the second question was, are there fees with title? What are they?
Yeah, go ahead.
Okay, cool. So yes, so the owner's policy is something, it's optional, it's not mandated. A lender's title insurance is. We've had this question a lot, like a lot of individuals will say, well, you know what, I don't want an owner's policy. I don't want to spend $30 on an owner's policy. And it's one of those things where, okay, you don't want to do that. However, if something pops up that the lender was insured on, and the abstractor missed it, or it was a water bill or a sewer bill or something like that, you can't go back to the title company and say, hey, listen, I paid you for title insurance, and I won't be able to file a claim now because I didn't spend the $35, and now that title company is not going to be responsible for, I don't know, that $1,500 water bill and filling. So it's definitely risky. We get that all the time. We've actually had buyers who have closed, with other title companies, and will call us and say, "Hey, listen, I've got a situation. What do I do?" And unfortunately, there's nothing you can do. So as much as it's, numbers could be tight, it's always recommended for you to get an owner's policy. As for title fees, Pennsylvania is regulated. All title companies, we follow the standard in the industry. There's, some fees can be, negotiated. The settlement fee is one where it depends on where settlement is and timing and things like that. But a lot of the fees are state regulated. So there, you can actually go on different underwriters' websites and find out exactly how much title insurance is, what your settlement fee is, and other items like that as to why the costs are what they are. Thank you.
Thank you, Diana. We look forward to hearing more from your segment next week with Raquel.
Yeah, that was a teaser.
Yes.
Thank you. I was getting excited for a moment. I forgot we had to end the segment soon. And we have another question. It's about credit, of course. Ms. Gouget. I'm trying to decipher this. When should a borrower forget? I'm going to ask that this gets rephrased.
For Michaela, or is that for Marissa, or for both?
Well, I saw a credit question, so I'm assuming it's for Michaela.
Okay.
But whoever wants to answer it, please feel free. I'm just trying to, after the credit writes off today. Can you unmute Hone?
Of course. 1 second, please.
Because I'm a little illiterate right now and I can't figure this out.
Of course.
I'm unmuted. Hello?
Yeah, how you doing, Hone? So can you ask your question, please?
Yeah, so there was a DLA, date of last activity, and it was like if you pay when they start doing like payment plan or whatever, that hurts you. At what point should you just forget about it? Like if somebody stopped paying something, there's some point where if you pay this, it hurts you. But then there's another point where if you pay it, it helps you. Where is that line?
Great
So
question.
basically, right when an account, how it works with collections is that as soon as an account goes into a collection or a charge-off status, it can never become a positive trade line again. So what that means is even if you pay the balance in full, it's still going to be just a $0 balance collection or negative item on the credit report. So if you get a collection, let's say today you receive a collection letter in the mail, we would definitely advise that you pay that, because the date of last activity technically would be May 2020. And if you make the payment in May of 2020, you've resolved that debt. Now, it's still going to be, like I said, a negative trade line on the credit report. Depending on the item type, the statute of limitations typically is 7 years that it will stay on the credit report. For us, we just don't want people, if anytime you make a payment, so if you got a collection, let's say in January, and you pay it now, it brings it from January current to May. So we will go through on the credit report and let clients know, we don't want you paying this, we don't want you paying this, we don't want you paying this. It's gonna reset the DLAs and drastically hurt your credit scores. Let's work to get as many of these items removed. And then, let's say maybe there are 1 or 2 items that are more difficult. They're proving to be legitimate debts, which can happen. It's rare, but it can happen. At that point, we can provide the client with attorney drafted documentation, either negotiating a lower settlement amount or a payment plan, but only upon agreement that once the payment is made, the trade line will be deleted and removed from the credit report. So if they do have to spend their money on that collection, we want to go about it the right way and make sure that we have legal documentation proving that it's going to be deleted and increase the credit scores, rather than just updating the account balance in the DLA and drastically hurting the scores.
Okay, so I have a follow-up question to that then. If somebody has a credit card bill that's legitimately theirs, they don't pay on it, the credit card company does the 30, 60, 90, 120, and then they do a charge-off, right? You'll see it on the credit report. And it's theirs. It's not like, hey, this isn't mine. It's theirs.
Mm-hmm.
Should they just forget about it and never pay anything towards that ever again?
So it's really a case-by-case scenario, because what factors into this really comes down to the dollar amounts of the collection type. So the lower the dollar amount is, the less likely that company is going to want to deal with legal, threats or litigation. When you get upwards of $5,000, $10,000, $20,000, we're still successful at getting those items removed, but that company typically will want to try and resolve that debt in some way, and they will file for a judgment or a lien, which they have to pay to do through the courts. So, worst case scenario, we're going to set the expectation, hey, you have a $20,000 repossession. We can get it removed, but there's a good chance that if we get it removed, you're going to have to set up a payment plan on this, because it's a high dollar amount. But again, we're going to confirm that. How many people has this account been sold to? Did they sell the car and get some of this balance back? There's, depending on every negative item type and how it's done in their processes. I mean, just like medical collections, that's something where the system is so backwards and unregulated, from a hospital to the billing department to insurance to collection agencies with HIPAA laws and things like that. It gets very, very complicated, and we just want to be able to weed out what actually has been stored properly. And most of the time, it's pretty rare that any company meticulously keeps the bookkeeping perfect year after year on every account.
Right. What I see a lot of times are credit cards, like the store brand cards, where they have $1,200, let's say, and they don't pay on it. They bought a whole bunch of stuff, and then they didn't realize that they weren't going to be able to pay on it, so they don't. And then that gets charged off, like when you read the credit report. Is that something that you could remove? And if so, does the borrower need to go back and pay that off, either with the creditor or the credit collection agency? Like, how does that work?
Typically, no, they do not. But again, it is a case-by-case scenario. And in the rare chance that the creditor comes after the debt, again, we see that in very high dollar amount balances. And sometimes they still don't even come after that. I've had plenty of clients that have hundreds of thousands of dollars in medical collections. We get it removed and they have not had to pay them. But we're always going to set the expectation that it's possible. So do you want us to investigate and work on removing this with a possibility that you could have to set up a payment plan? Or do we want to work on some other things that are maybe lower dollar amounts or much more straightforward deletions? And then when you're ready to set up a payment plan, we can go after and start working on removing some of those bigger ticket items.
Okay,
but again, every credit report and situation is different. No two credit reports are the same. So every single person has a very, very different scenario.
Right. The credit reports that I see are from, a lot of times they're from tenants. When I'm trying to fill my properties, I'm looking at their credit reports, and you'll see they didn't pay their cell phone bill, they didn't pay for this, that, all these things. And they're little sometimes. They're $50, $80, or a couple hundred, or even like on the lower ends of the thousands, 1,000, 2,000. So what you're saying is that there's a possibility that you guys can still delete those items, even if it is their items. I'm not talking about like wacky things. Right. It's theirs. You can get them written off or delete it without them actually paying into it.
Correct.
Cool.
All right.
That hurts a lot of people. Yep.
Yeah, that was good.
That was a good thing. I believe we have a Zoom coming up, a credit repair Zoom with Homebuyers and Michaela and the Philly team. That's coming up next. That was a teaser. I like that. I think we're wrapping up here.
I think the last question, and Ernest, you can wrap up after this, is this is probably the number one question we're getting as realtors is, are we able to go out and do tours?
Oh, that's a layup. Yes, we can do tours. But obviously there are some safety requirements that we have to follow. They're not too stringent. Basically, you have to wear a mask and make sure everything is sanitized before you enter the home and once you exit. So, obviously things you touched, you don't have to clean the entire house. And our team, we have a strategy in place for that, where it's going to be seamless. So yes, we can do tours. Yes, as of 2 days ago.
Mm-hmm. So. And Raquel just did a great DIY disinfectant.
Yes.
So everyone go check it out.
Thank you.
Sure,
yes, that was a good plug.
That
yes.
was.
Yeah, Raquel basically gave us a way to make our own wipes, because as you know, when you go out to buy wipes these days and toilet paper, maybe you gotta do one on toilet paper too, Kel. How can we make our own toilet paper? But she did one on how to make your own wipes. It was real good. It's on our Facebook page and hers as well. It was real good. You got. I saw you jump on, Lee. You have a question before we go? You okay? All right.
I do
Well,
not have a question. I'm good. Thank you.
Thank
it's good
you.
seeing you, Lee.
You as well.
So,
Thank you.
you're welcome. So if no one has any other questions, I appreciate all of our vendors: Diane Clerican from Housemaster, Michaela Gouget from ILA, Marissa Carey from Pinnacle. Who am I
Can
missing?
you say it right?
Diana Escobar.
No, Wachter.
Wachter.
Sure.
Oh my God. I got a brain freeze. The title company.
That's what you just said, Diane. Yes. Access Abstract.
I didn't say her title. Thank you. Access Abstract. I'm sorry about that, Diana. I don't know why we're butchering your name and your company, and we owe you. Sorry about that. Said Marissa. Thank you for the great questions, Home Tai, and everyone else that participated. So hopefully we'll see you all again. And we also have another webinar, part 3, and I believe that's our final series, which is May 28th, 12 o'clock. And next time we're not going to have as many issues with the Zoom crap.
We promise.
Yeah.
Sorry I joined late. I had some technical difficulties, but I'm glad to be here, even for a couple of minutes.
Oh, thank you.
Yeah, thank you for joining. And this thing was recorded, and we're going to disseminate it to all the people that registered. So don't feel left out.
Oh, awesome. Thank you.
Yes.